first thing that you guys gonna do is go back to assignment 1 and 2. You have the solutions to assignment 1 and 2. Semester 2. So it says A1 semester 2, meaning that if you look at my screen, A1 semester 2, assignment 1 semester 2. So you can see assignment 1 semester 2. This was the assignment, and this is the solution to assignment 1 semester 2. This is the solution. I'm sure that you guys have gone through this, but step by step, look at where you did wrong, what you didn't get right, and get it right. Get it right, step by step. There is everything here. There's arrows. There is. I mean, that's why there are some people who don't even bother to study much, but they just go through the solution I provide and then they do well. Okay, girls, especially you too, please, because you know. Yep, go ahead, Milani.
I had a more specific question. My question was question 3.1 under learning unit 3. I don't know how to calculate scenario 1 and 2.
Yep. Okay, no, we will come to this, but first of all, I wanted to clarify with Milani concerning obviously this is very important. If you'd give me a second, I will now go basically to your question. Sorry, I was clarifying Luca's question. Okay, let's now go to your question. You say that it is in section 3.2, huh? Learning unit 3, right?
Yes, question 3.1. How to calculate the 2 different scenarios.
Is this the example that you find in your textbook, the one that I'm showing you on the screen, or is it in the question section?
It's in the question section. Like I know, like I know the answer because obviously it's in the textbook.
Okay.
But I'm not sure how to calculate it because they don't show you the working out.
The working out. But have you gone through this? Did you see this in particular that I'm showing you now? This is your notes, question 3.1. This is your note. That's what you're seeing. This is the solution, obviously, but I'm saying, did you go through some of the things here? Did you see the annotation? It's not how can I say? I'm not. Whether you went through it or not yet, we can do it together, right? So don't feel like, you know, these questions, you know, are to trap you or anything like that. But I'm saying, did you see at least this?
No, I have not seen those notes.
Okay, so I mean, Milani, that's one of the things. I think that there are notes, there are annotation. Let's put it that way. The correct term is annotations. I think it's just a matter, first of all, go through the examples, look at the annotation. The 2 examples for question 3.1, they're giving you 2 scenarios. And the 2 scenarios are basically looking at one that is constant, where everything is constant, and where there is, as you can see, Ben Moore traders used to have a data collection period and credit settlement period of 30 days. The financial manager has prepared the following 2 incomplete budgets to help her with a very important decision. She must decide whether or not the data collection period should be extended to 60 days in order to boost sales revenues, or whether to keep the collection period constant at 30 days. That's the whole thing that you're seeing this question is just to make you understand the difference between. So you say you can calculate the gross profit, which is very easy, which is sales minus cost of sales, right?
Yes, as well as the net profit, because you say gross profit minus expenses paid in cash. My issue is when we come to the bank balance. In the opening balance for the month, we are only given
Yes.
March. How do you go about calculating the rest of the amounts? That's where I got lost.
Oh, that's where you got lost. Okay, okay.
Yes.
The opening balance, the opening balance in the question that was provided, if you look at actually the question, scenario 2, scenario 1, I just want to see the question. So that would have been provided to you, that opening balance, right?
Um, yes, that the only the 200,000 rand, yes.
You see, if you look at the question, remember, your question was specific on opening balance, but you remember you have a question, and in that question, they will give you element. For example, in the note here on page 76, they say the balance of the bank account on March, let's just say on March 2018 was 200,000. So that is a given that was provided to you. So it does make sense that the opening balance that you have is 200,000 in March. So that is something that is provided to you. That is not an unknown.
Yes, I'm with you, sir.
Okay, but it's a valid question. Yeah, but it's a valid question. Remember, it's a valid question. It's a good question. Uh, what is going to happen is that, okay, let me just go this side, because we have scenario 1 and scenario 2, as you can see. In the scenario 2, so the two of them, I put them together and I explain that which one rises, which one increases, which one stays constant. No problem. But we can take one by one. So for example, for scenario 2 is when we want to increase, because remember here again, the choice that we have is either to keep the collection period constant. It means that we collecting the money that is owed to us the next month. So if money is owed to is owed us in March, we're going to collect it in April. What was to be collected in April will be collected in May. What will be collected in May, what they owe us in May will be collected in June. So it's just 1 month later collection. And collection, as you know, I'm not trying to be funny. You know, it's about just receiving the money, right? So people are buying on credit, and some people are paying cash. Obviously, all the sales is all on credit. It is there. If you look at the table there, they say the sales, all of it is on credit. If all the sale was not on credit, then we need to evaluate which part is on credit. They could give you, remember, it's not just about this example. I'm giving you the general principle, the general understanding. Sometimes you could get a question that tells you only 60% is on credit. So work with that 60%, right? Okay, so But the data collection period is just something very simple. They just planning on either they need to extend it or either they need to keep it constant. That's all, right? So let's just go to scenario. The opening balance will be the same on both scenario. You keep everything constant, right? The cost of sales is obviously is a percentage. Sales, and then you have the cost of sales. You take sales, you minus the cost of sales, you get the gross profit, you minus the expense, you get the net profit. Now, what is this? What is sales minus cost of sales minus gross profit? What does it remind you of? The income statement or the statement of comprehensive income. Okay?
Mm.
The balance, the bank balance talks about another statement that it's a statement of income. So the cash flow. So here is your cash flow where you have an opening balance at the beginning of March, which is 200. We look at the movement during the month. So we look at the expenses that was paid. The expenses was 32,000 that was paid. That's the only movement. Okay, obviously it's cash. We paying, if we pay out, we have an expense, the money goes out. If they receive money, the money comes in. If creditors are settled in cash, it's money that is going to leave the company. And if cash is received from our debtors, it's money that comes in the company. It is a positive. So expenses paid in cash will be negative, and that's why we put it into to say that it's a negative. Creditors that are settled will be also in parentheses because it's a negative. But if we receive cash, it's going to be a positive. I just want to pause there and ask you, does this make sense? Is it clear?
To be honest, sir, no.
Milani,
So
Luco, is this clear? Is this easy?
no, it's not.
No, sir.
The only part that I understood was the part that you talked about expenses paid in cash. So from my understanding, we copied the exact same row in the top half of the scenario.
Okay. You're going to copy the exact same row. You are right, but you need to but you agree with me that you need to understand what it means, right? Because in your exam you could get a very different scenario, and if you do not understand, let's say they didn't put the expense paid in cash. Let's say they put an income. Are you going to copy the exact same row below the gross profit? No, because of the fact that you need to understand the principle. The principle is this: when we paying out money, when money is leaving the company, it is a minus, meaning that we don't have that money anymore. That money has left the company. Okay? So you have the plus is what we have, what we keep. So if for example, let me give you a quick example. But again, guys, the reason why I'm speaking this way is to see where exactly is the struggle. I want to make sure I understand where you are struggling. Because if it's a principal thing, is that maybe you didn't read your theory properly. Okay, let me go back again. Milani, if you owe me money, when you pay me that money, is it a positive or is it a negative for you?
It's a negative. Because money leaves me.
Thank you.
And
then you understand that principle. I'm glad. Luco.
Yes, sir.
Yes. Thank you. I like that, Milani. Now we're talking. I'm now more excited. But Luco, when when I owe you money and I pay you that money, is it a positive or is it a negative?
It's a positive for me because you paid me money.
For you, I'm
Yes, it's a
paying
positive.
you the money I owe you,
Yes, sir.
and
Yes.
money is coming into your account. So there is an increase. That's what we call a positive. So, um, so that's basically what I was saying previously, is to say that you have an opening balance. It means that the money is there already. This is money that you have. Okay. So now we want to find the movement during that month, the month of March. Did money
So,
go out or money come
sorry,
in?
sir.
When you look at
Sir,
the, okay.
s- sorry, sir. When they mean movement during the month, do they mean like the cash flow or like the actual money
Yes.
moving in the business?
Yes. No, no. They mean exactly what you say. They mean the cash flow. Is money coming in or money leaving?
Oh, okay, I see. So when they, so that
They mean
movement during the
exactly
month
what you mean. They mean
is the total is the
yes.
total cash flow of that month. So it includes the expenses paid in cash, creditors settled in cash, and cash receipts from debtors. Is that what they mean? That's a total of the movement during the month.
Yes. 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 You get it now.
Okay, so we are totaling
100%.
from
You got it
the
right. And
down
that's exactly how you understand. That's why you can see, look even look even at the way it is written. Look at my mouse. You can see there that the expenses paid in cash, it's a little bit in retreat, meaning that expenses creditors settled in cash and cash receipt, all of this, the sum of it is the movement during the month, meaning that you're going to take the opening balance of the month, which is 200,000, minus the only movement that happened during that month was the expenses that we paid in cash. Obviously, we sold things, but we did not receive money for the things that we sold because we sold them on, they
on
buying
credit.
it from us, but they're gonna pay us later.
Oh,
Our
okay.
creditors are paying us, they are paying us 60 days or 2 months later or 30 days later.
Is
That's
that
the
why
whole
we write?
question.
Is that why we
So they
write
are
it in
taking
April?
product. Go ahead.
Is that why we write it in April? Because it's after 30 days from March
Absolutely. Okay,
and
but
not.
remember, this is scenario number 2, right? Scenario number 2, whatever we sold in March, we're going to, because we're moving from 30 days, look there at the arrows, from 30 days to 60 days. That's scenario number 2. Scenario number 1 is only 30 days. That's scenario number 1. Scenario number 2 is 60 days. Look at the arrows that I'm providing you. We're selling product, but we're only going to be paid 60 days or 2 months later. If we sell in March, we're going to skip April, which is 30 days. We're going to go to May. We will receive our money. Look at cash receipts from debtors. So the cash receipt from debtors of March is, look here. Do Do you see? 175,000. 175,000 is received in May. Is that clear? Is that making sense?
Cash receipt.
Here it is. Here
175
it is.
pounds
Do you see it?
was
Do
received
you see
in
it?
May.
Sir, please.
Do you see it? Arrow for you?
Oh.
It's here.
Um.
Do you
Yes,
see
sir.
it? It's here. I'm making it bigger. No, look here. Milani, look here. Do you see? Do you see what I'm doing here? See this arrow. From
Yes, sir.
March, I skip April, I go to May.
Because its data is collected after 60 days. So, so we take that full 175,000 because they're all on credit, right?
Uh, do we agree though? Do you and I agree that what was sold, we have an agreement with our daters that they should pay us within 60 days? Do we agree?
Yes, sir. Okay, so I understand the cash receipts from debtors under scenario
Milani, can you?
2.
Yeah, we agree.
Yes, so it's just taking the sales and putting them under cash receipts
Yep.
from debtors after 60 days, basically under 2 rows, after 2 rows, in columns. So I don't
After two
understand the
rows, but what are those? I don't want you to say after 2 rows. What are those 2 rows meaning? After
60
2 months,
days.
not don't be stuck on rows. The under 60 days. Within this case, the 60 days is 2 months, so 2 months later. That's why you don't talk about rows, talk about month. So from March, April, May. So that's 2 months later. So we put it in May. Do we get
Okay,
that? So now the second thing I want you to agree with me. Can you agree with me on the cost of sales? What does the cost of sales mean? The cost of sales mean that we also purchase things on credit from people, right? That's the cost of sales. Do we agree on that? Luco, do we agree
yes,
on
sir.
that?
Yes, sir.
So we agree. So within this example, we taking things, but we paying for those things after 30 days. That's why you must understand the question properly. What is the collection period? What is the payment period? Right?
Yes, sir. So it's after 30 days. So just copy the column after 30 days, after 1 month,
Yeah.
basically. Okay, so okay, I understand that. I understand that.
I,
So that's
I don't want you to use that term. I don't want you to use that term. You are using terms of column. I want you to look at the amount. I want you to look at the amount, not the columns, not anything else. I'm saying the cost of sales means that you are doing a business. You are buying things from creditors and you are paying them back. And people are buying from you. We need to agree on that. So let's say you have a shop, a retail shop where you're selling clothes. You buy merchandise from people. Let's say you are a small retail shop and you are selling beautiful jewelries or clothing, right? And you need to buy your merchandise from big houses. They must sell you the product it and you sell it. Okay? So when we talk about the cost of sales, we are talking about the cost that it took you to buy, to purchase that merchandise. So you are purchasing the merchandise at a cost and you are repaying it. Obviously, because we are talking about business, we are talking about credit. Sometimes you take things on credit and you pay back later. So no, don't tell me about columns. Tell me about the repayment periods, right?
Okay,
I
so
want you to talk in terms of the collection period. Collection means the time that the period that you are collecting the money. And yes, you said something. What did you say?
so the only difference between scenario 1 and 2 is that the sales amount increases over the months in scenario 2, while in scenario 1 it remains constant. And we basically apply the same method.
Okay, so what that's not the only difference. Okay, the first major difference they want you to see is that the collection period has changed. What is not changing is the data the creditors period, meaning when we need to pay our creditors. Remember again, in the scenario I gave you, you are buying from also someone and you need to repay. And in both cases, you are repaying after 30 days. But they want you now to look at two scenarios. One where you are paying after 30 days and one where you are paying after 60 days. That's the first major difference. They want you to implement that in your calculations. That's where we are. Let's not look first at the outcome. Let's first look at, do you understand? Luco, Milani, do you agree with me that you're going to be paying your datas? So look at the sales on top there. Look at the sales. You have the first sales for March is 175. That's 175. You sold things on credit. You're going to recoup that money from you're going to be paid by the daters in 60 days. So March will be in May. That's why I'm showing you the arrow. Do you see this arrow? Like me, do you see this arrow here? The
Yes, sir.
175 comes here. Okay, so this, and this. This will be paid out here in May. For April will be paid out in June after 2 months. We agree?
Yes, sir.
Okay, the cost of sales. Let's look at the cost of sales. We gonna pay our creditors, the people who sold us on credit. Where are we getting our merchandise in the first place? We pay
After 30
them
days.
creditors after 30 days. 95 after 30 days. 110 after 30 days. Do we agree?
Yes, sir.
Okay. The rest now becomes easy. Milani, do we agree?
I think she left, sir.
Oh, okay. So Luco, therefore, if the movement during the month is negative, we take the opening balance of the month, which is 200,000, minus the 32,000. That's how we get the 168,000. Do we agree?
Yes, sir.
The closing balance of one month becomes the opening balance to the other month. This amount is going to be the opening balance for April. Do we agree?
Yes, sir.
That's it. So that's the calculation you need to do. Obviously, Milani is back. Milani is back. So I'm
Sorry,
happy that
sir,
I'm not the only one struggling with internet. Milani, can you hear me?
yes, sir. Sorry, I had load shedding.
Sorry about that. Sorry. So I'm happy I was not the only one struggling. But ladies, do we agree now? So I don't know where Milani left. Milani, do we agree on the creditors are paid after 30 days? Do we agree?
Yes, sir. Under scenario 2, and then the debtors are paid after 60 days under scenario
No,
2.
on the scenario 1 and 2. No, Milani. On the scenario 1 and 2, the creditors period doesn't change.
Yes, I'm
The
aware of that.
creditors is us. We pay them after 30 days.
Yes, I'm aware of that because the question says that the debtor's collection period is extended to 60 days. So that's what changes.
Yes. Yes, but the creditors, what is the creditors collection period?
It's the cash receipts from debtors.
Here it is. No. Look, listen to what I'm saying. I'm saying here it is. The creditors. It's after 30 days, right?
Yes,
Yes, sir.
sir.
Minani, do we agree?
Yes, sir. We do agree.
I, I hear Luco, but Milani is not saying anything because we need to
Yes,
agree
sir.
on that.
Yes, sir. I agree with you.
Milani, all merchandise. No, remember, we are purchasing. I think one of the things I'm not yet getting from you that you understand that we need to purchase merchandise in order to do business. So we buy merchandise and then we sell that merchandise later on. Okay? So when we purchasing merchandise, it's part of the cost of sales.
Yes, sir. I
The
understand
cost
that.
of sales, the merchandise that we purchase. Understand that?
Yes, sir.
And
I do.
that period doesn't change. It stayed the same, right? They say all merchandise is purchased on credit and sold within the same month. On credit, sold within the same month. The which is cost of sales represent credit purchases. So we purchasing and then we selling. We purchasing and then we selling. When we purchase, it's a minus because we get the merchandise, but money comes out. I just want to make sure that we agree on that because that's important. This cost of sale is a minus. This one is a minus. The sales is a plus because we purchase, meaning that yes, we get the merchandise, but money comes out because we need to pay money to get the merchandise. So that's why we do sales minus cost of sales to see the profit. We agree on that. So now I was talking about this cost of sales include what what we purchased. So it is, if we're purchasing something, we are dealing with creditors. If we purchase on credit, we are dealing with creditors. So we need to settle them. We need to pay their money. So we take things, when we say we purchase on credit, is that we take things in March, but we pay for them in April. We take things in April, but we pay for them in May. We take things in May, but we pay for them in June. We agree?
Yes, sir.
Yes, sir.
Okay, thank you. So this is a minus, expenses is a minus, cash receipt is a positive. So that's all we need to do. So you don't need, you just need to understand that your, go ahead, Milani.
So is this realistic though, like in real life? If a company were to hold inventory, would they have to buy it each month or each year or every 6 months?
It's very realistic, 100%, depending on the business. Not all the businesses are the same.
Okay, I see. So if
Super
you
realistic,
run
especially if you are dealing with like I gave you an example. I gave you actually an example of a retail company. So if you have a big retail company and they are receiving merchandise every single month, it is realistic because their sales are on a month to month basis, and that's why they take very good care of how much they're making on a quarter. If you look at this example, they only give you 4 months.
yes, sir.
It means that this company is tracking closely their sales, so it's extremely realistic. Actually, who is an entrepreneur between the two of you already? Luco or Milani? Who is an entrepreneur? Who's working already in? Who's working?
I, I'm slowly starting my business.
Yeah, girl, this is realistic. Yes, Milani. Yeah, you're starting your business. Yeah, this is realistic. This is real life. So there is nothing else, no other course that will be more realistic than this. This is very realistic, and this is what you'll find. So, but in any case, don't worry much about the realism. Worry about what they have given you. So I repeat again, for the two of you, read carefully the question. Read carefully the question. Understand the question and simply apply. That's all. So all you have to do here is basically you apply the data in 60 days for scenario number two. Scenario number two, it's 60 days. Scenario number one is 30 days. That's all.
Yes, sir.
Okay, do we agree on that? And I don't know, Milani, if you heard me. I don't know if you heard me. I said that you take the opening balance of the month minus the movement during the month. It can be a minus, it can be a plus. If it's a plus, let's say you only received, it's not necessarily must be a minus, but in this case, the expenses paid is a minus. So you take 200,000 minus 32,000, you get 168,000. So for the month of March, the closing balance for the month at the end of the month, it's 168,000. That closing balance for March will be the opening balance for April. Do we agree on that?
Yes, sir.
Milani, That was Luco speaking. Milani, do we agree on that?
That was Milani's.
Luco, do we agree on that?
Yes, sir. I agree.
Okay. So the closing balance for 1 month is the opening balance of the other month. That's all. So guys, please go through these examples by yourself. Luco, please go through this example by yourself. Make sure that you calculate and you can get the answers. If you want, this is the annotated version, but this is, let me show you. Milani, you back?
Yes, sir.
Okay, awesome. So guys, that's all that we have for today. We spent an hour. So what I would ask you, we can schedule another session, but I want you to do your homework seriously. Go take this example, do it by yourself, and see if you get the answers right.
Okay, sir.
Yes, sir.
Milani, do we agree? Luco, do we agree?
Yes, sir.
Yes, sir.
Please do not neglect the principle. Don't just memorize the question. If you memorize a question, you will fail. You're not going to do it. Understand the principle. This is a very simple question of principle. They want to see if you understand the
Yes, sir.
data collection period or the creditor settlement period. That's all they want to see. And they want to see if you are paying the money later than you are collecting the money, what is going to happen? So if you look at this scenario here, look at this scenario.
Yes, sir.
If I can just leave with that, look at this scenario. At the end of June, your closing balance is 144,000. For scenario number 1, at the end of June, it's 334,000. So when you are settling quickly, when you are paying your debtors and you are also collecting the money in the same month, 1 month later, you get more money, more profit. You're making more profit. But when you are paying your creditors first and then you collect money later, it's affecting your profit. Okay? No, sorry. Let me reverse that. My bad. What I'm saying is that the closing balance is less when you are collecting money after 60 days. Let me use that so as not to confuse. If you are collecting after 60 days, look at your closing balance. It's less. Fine. But look at the net profit you are making. Look at the net profit, 152,000. Look at the net profit year when you are paying your debtors at the same time as you are collecting the money. At the end of June, you can compare for yourself that you have less money, 55,000 net profit, 152,000 net profit. So Can you see the differences between the two scenarios?
Yes, sir.
Yes, sir.
You can see that this is constant. Net profit is constant. It doesn't change. 55,000, 55,000, 55,000. But look here. 55,000, 63,000, 78,000, 152,000. So is it a good decision to move the collection period to 60 days?
Yes.
Yes.
No, sir.
Yes. Who said yes?
Me.
Luco.
I
Who
said
said
yes.
no?
Was Milani.
Milani.
Okay, at the end of the day, how would you know? It's because after you've done your calculations and you make sure that you do the calculation properly, then you can compare. Then you can compare. So one of you said yes, one of you said no. They say no, in this instance, taking the risk could be justified. Meaning it's a good decision to take the risk to move from 30 days to 60 days. It's a good risk.
So, sir, the goal
Yeah.
is to have less money at the closing
Yes.
balance of the last
One more
month. Is
question.
that
One last question.
so? The goal is to have less money in
No,
the
no, 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 no,
closing.
no, no. That's not necessarily the no, 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 no. That's necessarily the goal. That's not necessarily the goal. The goal is the profit. Remember learning unit 1.
Mm.
It's about profit
Profit
maximization,
maximization.
and even better than profit maximization, wealth maximization.
So, the
Remember
goal is
learning
to,
unit 1? Guys, make sure you revise your notes.
okay. So, sir, the goal is also
Okay,
to
Luco, a question?
so sir, the goal is also to reduce the expenses of the business to maximize the profit, right?
Uh, no, it depends. You can have big expenses, but what what you need to have is more income to cover for those expenses. Because remember,
Okay.
profit it is equal to income minus expenses. So you cannot say that, yeah, yes, if you are minimizing the expenses, it's a good thing. It's a good thing because it can increase your profit. There is only income or you decrease your expenses.
Okay.
Yes. We
Okay, I
agree?
get it, sir. Yes, sir.
Perfect. No, so yeah, it depends. Sometimes you can decrease your expenses, but sometimes you cannot decrease your expenses. But what you need to make sure is that your income must always be greater than your expenses for you to stay in business.
Okay.